Good morning, people. It's Niagara Sam FX again. So there's this trade I'm seeing. Moreover, yesterday our Euro USD trade hit stop loss yesterday. It was FOMC news. If I see this trade tomorrow again, I will still take it again. Are you seeing it now? It was just my perfect trade, but that's trading for you. So that's how it hit here. So I just opened and saw that I didn't even know there was news. Just opened and saw that that passed through it. I did the analysis yesterday, so I just said that I have to come back to show us the outcome of it. Are you seeing it now? So it was a loss yesterday. Okay, so but this was a perfect, very clean, perfect setup. But unfortunately, it was a loss. Okay, so look at there's this trade setup I have for today. Same thing I do every day. Okay, so as at yesterday I had marked this zone. Unfortunately, it's not the trade I took. I didn't know price was going to get there, if not for the news. I really doubted that price would get there. Look at it. AED USD. Even yesterday's Euro USD, I was even thinking that the price was not. I was surprised that price still got there. I was thinking price will never get there that yesterday, but news pushed it up. So yesterday I missed. I was not able to take this particular trade. Are you seeing it now? The same thing. You can see liquidity sweep breaker block. Then price did whatever it did and then gave another block here. Palm marked it. This is inducement. This was inducement. Are you seeing it now? Price gave an inducement, continued. So price was surely going to come back, mitigate this. But I was not on this chart. Are you seeing it now? Here, I was not on this particular trade. I didn't see this. There's one other one I did not see yesterday. That one I had marked it, but I didn't set a limit order. GBP JPY. This is it. I had marked it, but I didn't see it. Look at this was yesterday early morning. I don't know why I didn't just open it. Right now, look at this other block here. So price came and mitigated this other block here. Are you seeing it now? That has very sweet liquidity here. Price mitigated it. Before price got here, there was inducement. See inducement here, shifted market structure. It also came here, inducement here again, shifted structure more than twice. It also even came here, the real one here. Market also came here. Please, if you are not understanding whatever it is, let me know so I will break down everything. It came here and gave a sweet inducement. The market came, tapped here, and pushed up. That would have given me about 6 hours, but I didn't see it. You see, you can't be everywhere. You are seeing it now. You can't eat your cake and have it. And you have to be careful. Let me use this opportunity to advise you. You have to be careful on emotion triggers because of opportunity cost. Opportunity cost is what you forego because you want to have this. So let's say you have 400 naira and you only have 400 naira and you want to drink a bottle of coke, or you want to buy groundnuts. Are you saying you only have what 100 naira? So it's either you pick one. If you go for coke, that means you are foregoing what the groundnut. If you go for groundnut, that means you are foregoing coke. Are you saying Coca-Cola? You are foregoing that Coca-Cola. Now the cost of you buying that Coca-Cola is not just 400. There's an opportunity that you could not take because you bought that so you because you bought that Coca-Cola. The opportunity is that granite. So that's cost. Are you seeing it now? So that's opportunity cost. That opportunity that it cost you that you could not take because of this is an opportunity cost. Are you seeing it now? So be careful of emotion triggers that arise from missed opportunities or opportunity cost, because some people could come and maybe price had already triggered, has gotten to where they were expecting, but maybe they didn't remember, they were not to the chart, and then because of that emotion now drive, and then they now just want to jump into the trade. Doing that alone just spoils everything for you. And there's something I from an ebook of Mark Douglas. He was saying that, you see, your emotional brain, is has been existing for millions of years. How old you are, your emotional brain has been in existence there, triggered by hormones and other things. That it is more than 1,000 times stronger than your rational mind. Your emotional mind is stronger than your rational. Your rational mind is the one that studied trading. It's the one that knows other blocks, that knows, okay, these are my rules. It's your rational mind as well. I shouldn't do this, I shouldn't do this, I shouldn't do this. I should do this. Are you seeing it now? Now, your rational mind does not stand a chance of winning your emotional mind in a fair fight. Meaning, all things being equal, you cannot be emotional in a trade and your rational mind will win. That is why you find yourself, you know the strategy, you wrote the rules, you even wrote them very big, and you pasted on your wall and you are seeing it. But when that time comes, once emotion kicks in, you throw all of them away, and then you go with your rational mind, and then you revenge trade, you enter impulsively, you add position sizes to a losing trade, and all that. Are you seeing it now? So once you allow your emotional mind to compete with your rational mind, there's no way your rational mind will win. So what are you supposed to do? Mark Douglas now said that you should stop making it a fair fight. Let it not be all things equal. Don't allow it to trigger. So how do you not allow your emotional mind to trigger? Because it is way, way stronger. How do you cage it? Because if you open it in the gate, it will always beat from the cage, it will always beat your rational mind. So how do you stop that? Number one, position sizing. Don't risk any amount you are not comfortable to lose. Once you are risking an amount that is not boring, that is exciting. You are risking an amount. Excitement is emotion. Once you risk an amount that you are thinking, okay, this one hit TP, I will make so much money. Once it is that, and you look at the loss, it's not something you can handle. There's no way you're not taking rational decision. Once the trade starts going against you, and then if you eventually lose that trade, just know that you will lose more because you want to revenge. That's emotion. I see it, and it has cascades of emotion. So number one is, don't what? Don't risk little. Each trade, I don't risk more than 0.5%. No matter how good it looks. No matter how good it looks. Because your capital is not just the money. Your capital is your clean head, your clean mind. Are you seeing now? Why didn't I check this GBP JPY trade yesterday? Are you seeing it? Why didn't I even check that AED USD? Because I was holding a position. Are you seeing it now? So it's capital. Your capital is not just money, it's your emotion. I was holding another position and they were going well. So that was my focus. Are you seeing it now? So that's where um, um, cost comes. So just make sure as much as well that you are not emotional. Number one rule, don't risk. Make sure it's not a fair fight because your emotion will always win. Are you seeing it now? That is one. So make sure you are using amounts that you are not bored, you are bored about. The money said no go to make sense. Are you seeing it now? Are you seeing it now? So sorry, I had to pause because of noise. Okay. So your emotional mind is way stronger than your rational mind. So stop making it a fair fight. So number one way of stopping that is to make sure your position sizing is okay. Are you seeing it now? Number two reason of making it not to be a fair fight is that don't revenge. Are you seeing it now? Have clear rules and stick to those rules. Are you seeing it now? You are the strategy, and the strategy is how you behave when losses come, how you behave when you make profits or losses. Are you seeing it now? So have clear cut rules. After one good trade a day, you back off. Are you seeing it now? After one, two bad trades highest, you back off. Are you seeing it now? Because if you don't back off, your emotions will take control of everything. Are you seeing it now? Everything trade is independent. Don't trade your emotions. Don't trade your past. Some people are taking trade because they lost money, not because of what they are seeing. That's why you discover that after the end of the day, if you go back to seeing the chart, it becomes clear. You say, why didn't I take this trade? Why didn't I see it like this? Because at that point of action, your minds will be clouded. Your rational mind was overpowered by your emotional mind. This is probably one of the, the best videos you will watch on trading psychology. Are you seeing it now? So make sure you position size properly. Let your position sizing be accurate. Don't take trades that are too expensive for you. Take something that is boring. Right? You hit TP, it's not something much. It's just 1% I'm making. 0.5 I see is 1% I'm making. If you hit TP, oh, I just lost 0. So you are not taking it personal. It's not getting to you. Okay, so that's if you can practice this, I think that's what I just said. Let me digress. Okay, little. So let's go back to this. So I didn't take this. I didn't take this particular trade because I was obviously not. I was obviously engaged with another trade. Are you seeing it now? And I have a rule of not opening too many positions, so I don't get emotional in any way. But this would have been a very good trade. So let's go to what we have for today. So AUD USD. This is what I want to to trade today. Now, what happened here? Just as I said the other time, there is an order block here. Price, because of news yesterday, pushed right from here, pushed and tapped into it. Are you seeing it now? Now, what I wanted to trade yesterday on ADS, what I was hoping to trade that yesterday was this particular place. Though I didn't take because I was already engaged with another trade. But and I'm going to show you the reason why I did not place a pending order here. One of the reasons is because I had another zone up here, and once I'm seeing two zones here, I don't want to take this. I will approach this with confirmation entry. I want market to go there, shift structure properly before I take it. I say once I'm not sure, or I go for the extreme. But honestly, I was not expecting price to come here yesterday. Are you seeing it now? Okay, so I saw this breaker block. Remember how we always do it. This is breaker block. Market came and broke it. And while broken it, it gave us an order block here. Are you seeing it now? So I marked this. So what did price do? Price came and passed through it, disrespected it, went to this one. Are you seeing it now? Now, this is why I want to take this sell. Listen very attentively. This is why I want to take this sell. Now, this is how price action happens. As price passed through this place, as price came here, passed through this place, disrespecting this guy and coming here, what price is supposed to do normally is if price wants to go up, if price wants to continue going up, one thing would have happened. It would have come above here, closed above it, even if not, then use this same zone as a breaker block to push up. That's one thing price could have done. Another thing price could have done is that price would have, as it tapped here, if it really wanted to buy, it will come down, use this other block which has become a breaker block, use this breaker block to push back up. That is what the two things price would have done if it wanted to buy. But what did price do? Price pushed out, price tapped here and returned back. Now that it has returned back, and what's made price to push is not that price really wanted to go there. News pushed it there. And what the price do? Because they really want to continue that sale, price came back down below this other block. Price now came back down, then created liquidity here inside. So what do you think price is going to do? Price has no option but to come here, tap into this now, because it has already tapped into this. It's not going back here according to my analysis. Are you seeing it now? It has already tapped into this. It swept liquidity inside. Are you seeing it? Tapped into this, came back down. So price has no option but to come, tap here and drop. That's my probability. Are you seeing it now? So that is what I'm expecting price to do. Okay, let me remove all this. Or should I explain again? Let me explain again. So price came here, tapped. If price wanted to go up, it should have gone above, tap here, use it as a breaker block. A fade, that is a fade order block, is a breaker block. Use it as a breaker block to go up. Or it should have come back, use this fade order block to tap it and go up. Price did not do that. It came down and closed inside, created internal liquidity. So what price is going to do is to come here. From here now, you come here, tap into this and drop. Simple and short. Are you seeing it now? So that's what I'm expecting price to do. Now, that is the narrative for it. That's the narrative I've built for this particular trade. Now look at what I I use to take my trades as always. So I will check 1 hour time frame. Do I have a breaker block? Yes. Do I have a break of structure? Yes. Do I have another block? Yes. Mark the other block. So I'm using it as if nothing happened, as if price did not go above it. But that price going above it is even giving me a better, what do they call it, confluence. So I'll go to my 15 minutes time frame. Just as always, I'll look for inducement, right? Okay. So let's say the whole of this movement is news, right? So I'm not counting it. Okay, let's just say I'm not counting it. So price did as if it was returning. Are you seeing it now? And then it did a market structure shift and broke structure. So this is our inducement. Are you seeing it now? And then this is inducement break of structure. Let me mark that. Simple and short. Just always make sure that you have narrative, you have why you are doing whatever, and you are consistent with it. Allow the market to show you what it wants to do. Mommy, go. So this is inducement. Let me make this to the top side. This is inducement. Then you have inducement break of structure here. So marking this as my inducement break of structure. I'm marking that as my inducement break of structure. Okay, let me edit this so that it looks cool. Down, center. So that's my inducement break of structure. So I'm expecting price to come here, tap and drop. Are you seeing it now? That's what I'm expecting. Price to respect this other block. Okay, let me place it again. So I put my entry here, my stop loss just above a little room, and then here. So if you are very what do you call, generous, you can take it above here, but I'm not expecting price to come back here again. Okay, it has done all the damages it needed to do, so it's not going back there again. So if you look at it on the 1 hour time frame, just above that other block, that 1 hour other block, you can see it. This one is just above it. That's all. So it's just above. You can see that my entry is just, my stop loss is just above this one, just a little room. It's not tight. Are you seeing it now? So that's what I'm looking at. I also have one on Nasdaq. I also have one on Nasdaq. In trading, never say never. So price, I'm expecting price to come here. I'm expecting price to come here, tap and drop. Now, why am I taking the trade? Just as I do it always. This is a breaker block. Where is it? No, this is what I'm using. This particular thing that is like an order block, price came to the sell, so it's a breaker block. So price swept liquidity here. Are you seeing it now? Price swept liquidity here, broke structure. The whole of this big green candle is the order block. Are you seeing it now? So price swept liquidity here, broke structure, which I marked. Are you seeing it now? Then I will go to my 15 minutes time frame to look for the actual point I'm using as my order block. So I'm using this green candle. Are you seeing it now? The whole of that green candle. Then I came down. There's a balanced price range here. So my entry is just around there. Why I'm even coming here is for inducement. When price was going back, that it can be a loss, it can be a win, but you can see it's the same thing I do every day. Are you seeing it now? See, you cannot be a consistently profitable trader without being a consistent person. Are you seeing it now? You cannot be a consistently profitable trader without being consistent yourself. So you have to get to a point when you are consistent, when you are mechanical. When they say something is mechanical, it means it works the same way every time. So if I driving a bicycle, it is mechanical. You have to pedal it forward for it to go forward. It is mechanical. A car that is driving is a mechanical. It works the same way. When you turn on ignition, if you change gear one, it works the same way. So your system has to be mechanical because the market itself is um, very random. Are you seeing it now? So you too cannot be random with the market. So you have to be consistent in how you approach it. So this is just it. Okay, this video is getting too long. So please, I believe you like what I'm doing here. Subscribe. This is how I'll be doing it every whether it ends up in loss or in profit. Okay, like, subscribe, watch. If you don't understand, ask questions. Whatever concept it is that I'm using to explain whatever I'm doing and that you don't understand, let me know. I'm going to break it down. I'll break it down as if you're in primary school. Okay. All right. Thank you very much. Have a profitable week.